Good afternoon, everybody, and welcome to the live market analysis ASX edition. My name is Carl Capolingua. I'm the market analyst over here at Think Markets Australia, and it's a pleasure to be with you as we delve into the depths of your Aussie portfolios. It's going to be a tough one today, I suspect, with the way markets have been moving of late, but the goal is always to keep the winners, kick out the losers, and find some great new stocks to trade. With that in mind, let's head to the rules today, which are pretty simple. It's over to you. We are going to do your questions versus my analysis. We may do some themes today. So I'd love to do another lithium sector review. I'd love to check out the uranium stocks. We haven't done that for a little while. We might even head into some of the other areas like copper, and certainly I've got a request for rare earths as well. So certainly stay tuned. But if you are live in session with me, hit the Q&A window or the chat window, or if you are watching on any of the streaming services, YouTube, LinkedIn, Facebook, or Twitter, you have ways to get in touch with me as well. Let us head over to here. It just happens to be the first chart on my screen. If you know me well, you know I do love to watch AusPiss, and it's always on. I've got a TV up here in my office, and it's always on. And Mineral Resources was a stock they covered today. So given it was on my screen and I was looking at it, we might as well kick off here with a very quick overview of how to do things. I promise it'll be quick. Long-term trend, short-term trend is where I start. I need to understand what the trends are doing because I'm a trend follower at heart. I don't predict what's going to happen because I have no idea what's going to happen. I simply follow the trends. And to identify my long-term trend, I use the 144 and 233 EMAs. You can see the values of those numbers as of where the cursor is. That's the blue line. So the last value there for those numbers, $75.64 for the 144 and $73.35 for the 233, and it tells us therefore that the shorter term of the two is still above the longer term. But because they are getting closer together, we've got through the traffic light system an amber zone, which means caution. The trend is technically still up, but it's extremely undecided right now. And then the same again for the short-term trend is the 21 and 34. We can see here that the 21 is decisively below the 34, and therefore we do have a downtrend in place. It has also started to contract, and therefore it's gone amber. So for Mineral Resources, with both trends reading amber, you're very neutral on this one. I think, in fact, in last week's update, where I said, look, I've been very bearish on this. Let's go back to neutral. That hasn't been a great thing to do because, let's face it, the rest of the market got belted. So this one's been a little bit belted as well. But look, I think you're neutral to bearish on this one. At best, is buy on the table? No, buy is completely off the table. So for me, with my own personal money, which I value quite highly, no, this would not be in my portfolio right now. If you had it, could you hold it? Well, I think you can give it a little bit more time, but only a little bit because, as you can see here, I've written on the screen before, if we're closing below, say, 67.50, we're all out. That is the point where I can no longer see a reason to own this based upon what the market is telling me. And there might be lots of things I think I know about Mineral Resources, but at the end of the day, it doesn't really matter what I know. Doesn't matter at all. Only matters what the market does. If the market gets below 67.50, I'm going to suggest to you that this could actually be an almighty short. It could be one of the best shorts you'll ever see because it's just the way stuff sets up. Now, there's no reason for Mineral Resources and Dominos Pizza to do the same thing. There's no reason, ladies and gentlemen. Again, I don't predict, but in my experience, when trends change like this, and you can see how the Dominos trend went through that same traffic light system of everything's hunky-dory to, hey, just be a bit careful, to be really careful, to be extremely careful, to there's no reason anymore to be in this company. And whilst everybody told you it was a great company with great fundamentals, my model said you can't be in it. Let's do Dominos while we're here, because I know it's popular. But just because it's on screen, I'll do it very quickly. Short-term trend clearly down, long-term trend clearly down. The price action is still lower peaks and lower troughs. We didn't quite get to that on Minres, but we'll go back and we'll do it. But it's much different really from the moving averages, because the price action is what the moving averages are summarizing. So the price action is the coalface of what supply and demand is doing, and the moving averages are just tools we can use to very quickly, when it is our job to scan through a large list of stocks, we can very quickly identify the companies that we might be interested in buying. And certainly you can see, if I can see red there, there's really no reason to continue to look at it. If I can see amber, I might then look at the short-term trend. So you can see I can get through a list very quickly if I wanted to do it manually. That's not what we're here to do. The price action, if I was to go in and draw the price action on each of those charts, it would take me way too long to crunch a big list. And that's the beauty of those exponential moving averages. And then once you've got your short list, only then do you go in and draw your price action. Okay, price action not great here, but I would be interested in Dominos. Okay, I don't think all is lost here. If this starts to perk up and starts to print, say, above that peak there, so let's call this a little pos. And if Dominos can do this, look, to be honest, it's still a long ways away, isn't it, from changing my trends? But I think that would be positive, and we'll put it more in the hold light. Let's not go too much further into the future, because I would need to see this turn at least amber before I could even contemplate buying it. So I talked about the probability I guess the percentage that buy represents to me on mineral resources. Look, I'm still at 0% here. Buy on Dominos. Hold. Look, I think you can hold it as long as it continues to trade above this very significant point of demand. And I say it's very significant because the final flourish that I use are my candles. So big picture trends, long and short term, and then price action, and then candles. So you can see this really long lower shadow. What that indicates to me is we had substantial demand come in on that day. And I know it's substantial because the supply was substantial as well. So you had a big changing of the guard for Dominos here. You had a bunch of traders getting out, finally capitulating. That's the volume there. And that selling was soaked up, possibly also by fund managers short covering, because let me tell you, whilst you thought this was a great fundamental buy, the fund managers were shorting the hell out of this thing. And when you see that big lower shadow on the big volume after the big decline, often that's short covering coming in. And then we need to see and wait to see what the next move is. And if we get a little pump back in volume to remove that last little bit of lingering nagging supply, that's when it could start to look interesting. So I can go a hold as long as it continues to trade above. I'll tell you what that low is, 40.75. Beneath that, I think there's, again, it's a slippery slope, because the history of this is just bumping around the bottom until the next big dip. Okay, 0% buy. We're going to go 25% hold for the reasons I suggested. And that means, unfortunately for Dominos, we're still really, aren't we, at a 75% sell. And that's how we do things today, ladies and gentlemen, certainly when we're talking about our technical analysis, and we're going to do some company valuations very soon also. But just getting back to the MinRes, and I said to you that buy is still 0% for me on this one. I don't know, it flies in the face of many people who tell you it's got great management. You know, there's a particular person at the helm of this company that is just so amazing. Therefore, you know, it's just going to be the best company ever. Maybe, I don't know. I can't tell the future. But what I can say is, despite the market knows that, okay, every person who either owns mineral resources or has cash knows that fact, and yet this thing is not screaming up the screen, is it? So that would tell you that they're discounting that apparently important factor. But what I would say is that, again, I'm probably going to go, I think we're probably less at a hold here, aren't we? I'll give it some respect. I'm going to say I couldn't put it less than Dominos, could I? So I'm going to go 25% hold, which means I'm still, unfortunately for MinRes shareholders, still at a 75% sell. Now, I could do the valuation on either of those. Are we curious? Do we think Dominos is cheap? Do we think MinRes is cheap? Okay, count to 30 and MinRes will be done, and then count to another 30, and I promise you Dominos will be done. Okay, let's go to the Thomson Reuters Refinitiv Icon spreadsheet, which takes broker consensus data. So we're going to see, we've got a bunch of brokers. You'll see a number of estimates when that finally retrieves. Hopefully it retrieves, otherwise we're in a bit of trouble today. It's out of my control. It comes from Thomson Reuters, which is one of the world's biggest data gatherers. And you can see here they've surveyed 16 big broking and research houses, the smartest of the smartest smarty pants. I can assure you they're going to do fundamental analysis way better than you plus I squared. Okay, and they predict what stock's going to do this year, next year, the year after, and we get our consensus estimates. We get our growth rate on those estimates to give us a compound annual growth rate for the next 3 years. And we also have our historical data in the bag. So we can see 16 brokers. The average price target actually is pretty good, isn't it? MinRes 79.85. That's 15% upside from here, and in theory, you're getting about a 2-ish% yield in the meantime. Their ratings: 1 strong buy, 7 buys, 4 holds, 4 sells. I would say this is a very polarizing stock. I wonder what those 4 sells are seeing compared to the buys. EPS line is at bottom left, top right. It isn't. Mining company, it's going to be lumpy, and you can see it has been considerably lumpy, and that does bother me a bit. Going forward, however, the brokers are expecting a substantial jump for this year from last year, and then next year again, and then slowing down considerably, but that is still a very, very healthy compound annual growth rate for the next 3 FYs. The company's trading at the moment on a forward-looking PE of 10.2, a current PE of 16.7. I like to look forward, not backwards, and I would suggest to you that based upon all of my analysis here, that on the first pass, look, is 10.2 the right PE? If you think it is, the company is overvalued by my metrics, but I think, geez, if you can get 18% growth, even though it tails off at the end there for a PE of 10.2, this stock is super cheap. And I'd probably do a couple of things here. I'm going to bump this up because I probably think, based upon historical, I think we can go to 15. Okay, so I think we can go mid-growth here at 15, which pops that up. But then I'm going to downgrade it here to at least moderate, because it's a commodity stock. And you may prefer to mark it at high, because where a lithium price is going to be, where an iron ore price is going to be in the future, we just don't know those things. And this is not for me to tell you. This is for me to just show you. At a low rating, it's 36%. What we're doing is we're changing the rate at which we discount the company's future earnings. And I'll let you decide where you want to place MinRes. Look, at best, I would go the middle one, which starts to agree with the brokers. How about that? My spreadsheet agrees with the brokers, and that's because my spreadsheet's a very, very good spreadsheet. And I can assure you, ladies and gentlemen, that the brokers are using similar spreadsheets, not the same, but similar spreadsheets to the one I am using here. And ladies and gentlemen, that is what fundamental analysis is, isn't it? It's ultimately cells in a spreadsheet, and what all the smarty pantsers in these offices believe should be in that cell. And for me, that makes fundamental analysis, ladies and gentlemen, far more subjective, not objective, far more subjective than technical analysis, which we'll see as we go through today is quite objective. For the Dominos crazies out there, I won't go in such painful detail, but let us say that 14 brokers suggest to you that the price target is 20% above the current. And in terms of their ratings, 1 strong buy, hanging in there. 4 buys, hanging in there, 7 holds, and a couple of sells. The EPS line is at bottom left, top right. Well, it was until we hit inflation and we hit cost of living pressures, etc., etc. And we're going to see actually substantial pullback in earnings, but probably from next year, we're going to see that earnings growth come back in. So that in theory, we have the most spectacular earnings growth forecast for Dominos. How about that? Look, I'm going to put this back to low for a second, and then you guys and girls can make your own minds up as to what you think it should be. I'm going to set it back to the basic, and lo and behold, actually, there you go. Just with the default settings, as I said, my spreadsheet is a very good spreadsheet. It comes up with, lo and behold, the broker's target. Who would have thunk it? But let us consider whether 21.8 is an appropriate PE for Dominos, and maybe I'll give you an insight into that risk rating. Well, I think for 23% growth, given the market's probably going to give us high single-digit growth for the next few years, 23% is outstanding. We should expect to pay more than the market's average PE of about 15 for that, and we're paying 22, which I don't think is expensive for such incredible growth if the company can execute, and that's a big if, because they haven't been executing a whole lot lately. In terms of historical PEs, 21.8 actually I think is really appropriate, isn't it, in terms of historicals, and it is the future PE, so that's fine. I can't see any reason to doubt that. Now, so I'm okay with that. Okay, I don't know the future, so I'm not going to tell you what the risk level is. But if you have Dominos and you're wondering if it's a bargain, consider this. If we use a more moderate risk level, if that's what you're happy to put in that cell, in that spreadsheet, then we're about 8.6% upside. And I reckon maybe the market is using this. Maybe this is how the market's feeling, because we've got what the brokers are thinking, and then we've got how the market is actually pricing Dominos right now. And what we could see is, as some of these risks subside, and this is the upside for Dominos, if the market starts to think, well, okay, they're starting to execute, then some of this becomes possible. And hopefully the light bulb just went on for you, ladies and gentlemen, in understanding how company valuations and fundamental analysis works. We've got really how the market is thinking about Dominos. Now, yes, the brokers are here, but we've got this execution risk to get there. So where are you on that spectrum? I don't bloody know. If you know, then you're smarter than me. Let's head back to here. and start to do some of your requests today, which I think I'd better start doing sooner rather than later. And I'm going, look, I'll do the Zoomers, because you're always very good to me, Zoomers, by doing that diligence and tuning in a huge number of Zoomers to Doug. And see, probably a record number of Zoomers. Let us do for Doug. Actually, sorry, Doug, you're second. Daniel has SSM, Servicestream. Let's head over here right now. SSM. Well, I don't know. Geez, I drew lots of arrows on this last time, didn't I, Doug? But the most important thing I drew, I think, was the plus 1/3. And let me show you something so important. Actually, we're going to see it here first, Doug. But cast your eye down here, okay? This is the relative strength comparative, and I use it over my 34 periods. You know, it's one of my favorite periods. And you can see this now. How clever is OBS? I've managed to label all of these so I can put my ugly mug in the corner, and you can still see what my indicators are. Hooray for me. And managing the technology. But this is the key to this little indicator down here. It's showing how much Servicestream is beating the market. And we know, if I head back to my macro watch list, and we head back to, or we can look at the NASDAQ's been heading down last few days. Look, we're not really surprised by that. I said it was going to come back to the light green zone. That's what it's doing. If we head over here to what that actually, in fact, you know what, Daniel? That Servicestream, remember, I set this a couple of sessions ago. I set this at the NASDAQ. I set my RSC against the NASDAQ, not against the XJO. So that's what the XJO's done. And let's go back to Servicestream. Very important we understand how that indicator works. So this is, Daniel, this is how much Servicestream is not beating the ASX. That would be easy. This is how much Servicestream is beating the NASDAQ, which is even better. Okay, so plus 1/3, I think we're going well. Do we need to change that? No, the candles are still amazing. And you know what I liked about this so much. And the reason why I drew all these arrows is I was pointing, each one of those arrows points at a green candle, a white candle, okay? And it just speaks to just this overwhelming sense of demand. And what do I say when I talk about all those green candles? You hear me say words like, it's in the basket. Fund managers don't care what the index is doing. They have to buy this. For whatever reason, they've got orders coming in from particular fund managers to buy this one. And if the market's up, the market's down, they still have to buy it. That's what those white candles represent. And lo and behold, all the indicators do is tell us stuff we already know by looking at the chart. And that RSC 34 is saying, look, you've got some substantial outperformance of the NASDAQ, mind you. Do I need to sell this? No, I don't. Absolutely not. Do I need to buy it? I could have bought it yesterday. It's down a little bit today. I won't buy it on today's candle. Today's candle's still live. We're going to get an update in a few minutes, and that potentially will change. But hey, if we finish with a white candle today, Daniel, I'd actually add more. I'd be happily adding more to this. But there's no reason at all to sell it. It's one of those wonderful turnaround plays. And we'd see when we talked about Dominos and how I said, oh, look, we need to see the Dominos long-term trend turn to amber at the very least before I can then start to look at its short-term trend metrics. And that's what we waited for here. Okay, so pretty happy on that one for you there, Daniel. I'll do your second one, even though today we probably won't get a lot of second ones, but I'm glad I did, because I'm seeing the same sort of cluster of white candles coming here on Janison Education Group. Would I buy it? I'm going to refrain from buying it. I think there's some really good stuff happening here. It is looking to be one of those textbook turnaround plays. But two things are holding me back. Obviously, we're not at least amber yet on the long-term downtrend. It's definitely a long-term downtrend. And the fact that it is pretty sketchy and pretty illiquid is my guess, just from the fact that these candles are very full, they're very blocky, and I don't know, the volume actually doesn't look too bad. There's got a few millions in there, but probably not enough to get me into this. Well, certainly not enough to get me into this now. But if you've got it, I'm a happy holder. Ask me about it again in the near future if some of those parameters start to change. Okay, Doug, back to lithium here. This is one we've been very positive on in the past. It's done quite well. We've had two decent down days. Today's candle, as I said, is still live. I'm still a couple of minutes away from getting the update, which I'll do maybe as we speak about this one. I know what Doug is asking about, should we take profits? You know, should we manage our exits? We're probably sitting on a nice trade here. Those two candles are disturbing. Are they enough to get out of at least some of this trade? Remember, we don't have to sell it all. We can exit 1/3. Look, I would say if we close on the low today, because we've taken out, Doug, see, this is a very strong candle through here. And if you're wondering which candle it is, it's the candle that has just been labeled candle 1. Okay, so whilst demand remains the dominant force in one of these exponential trends, there's every reason to hold on. And we can often use the most recent significant demand candle as a bit of a delineator between where demand is intact and supply is starting to take out that demand in the market, or demand has simply run away. And I would look at that low as an area. And if we close beneath that low today, I think you've got reason to do this. And that's all we're doing at this stage. I don't think you're doing anything to anything more sinister than that. And we are therefore saying we've still got remaining on this trade. If you were to get a close beneath that level, that would be disturbing for me, certainly if you're going to close beneath the low at 100%. And probably the most likely scenario here is we pull back and we get another move up, and then we'll see how we go with the rest of the trade. If it started to make lower peaks and lower troughs, then we're going to do other things. We're going to get out more than just the third. But until then, I think I'm happy to give it the benefit of the doubt. I want to just zoom out because I just needed to make sure, and this is what this says from our last analysis on this, which says finally we have eclipsed that big point of supply. And you can see here how the supply from that level manifested itself in the market on that day, right there. And then we overcame it and popped through. So what we should expect is that old point of supply, not should, I mean, it could well act as demand going forward, okay? And this is maybe where we get that little bounce. You might be saying, hey, Carl, if it closes beneath there, it's so close to the bounce level, why would you sell it? And I would say, I don't know it's going to bounce. All I know is I can see supply coming to the market, and that makes me want to sell some. That's all. It's just so simple, isn't it, when you think about it? I can see supply coming to the market, so I want to sell some. Do I want to sell it all? No, I don't. While I'm here, I've done Minerals, I've done Latin. Let us do the tour to lithium. I didn't mean to put that one in, but we're going to do Piedmont because it's on screen. I meant to go to PLS. Very flat. Short-term trend is down. Price action is down. Long-term trend is up. I can go hold on that one, but that hold on hold is becoming increasingly tenuous. I'd be looking to lighten the load beneath that level there. Let's go to Pilbara now. It seems to be holding on reasonably well. The last three candles aren't great, of course, but you can see here it's beating the NASDAQ. Not that that's relevant, but it is beating the NASDAQ. Therefore, it's also beating the ASX 200. So on a relative strength basis, I can forgive these three candles and go a hold here. But what we are getting is some interesting price action. If we were to get something that resembled this, obviously after that move there, then if the POSs, and you can see my writing all over the screen there, POSs and pods. But if we did something like that, that's where I'd be certainly looking to manage an exit on Pilbara. But I don't feel that needs to be done just yet. And not sure what I changed the color of there. That's the one I wanted to change the color of. Let us go then just alphabetically to Allkem. Oh, happy holder here. Is today's candle, if it closes there, a buy signal? Geez, 1675 is very close, but I don't think it's a big surprise. I think that's a very strong candle. I mean, this is no doubt we're going to look through a couple more lithium stocks, but I'm going to suggest to you this is going to be the strongest we're going to find. I will hit the update now, and we'll get a new update. And remember, we won't know until 4 o'clock. But I would say if we can go, well, there you go. I was about to write in if we close on the high, then it could be plus 1/3. And you can see how that update's come in. And this is why you never make a decision based upon a live candle. The earliest I'd make a decision based upon a live candle is 10 minutes before that candle closes, and no more than that. Okay, so look, I'll go hold on that. Certainly hold, maybe not a buy just yet. Argosy is one we've watched in the past. That one is dead in the water, ladies and gentlemen. I can't see any reason to own Argosy. Many of you would tell me it's got great assets or whatever that means, but I'm just not interested at all in that. I need to span 20 seconds because I can get the YouTube handle in. So hopefully I've made it before I get to core, which is the next one here, CXO. I said to you last week, I can't see any reason to own core lithium. And if you didn't listen to me, you're disappointed, obviously. And I still can't see any reason to own core lithium. There's a little white candle there. It would need to make higher peaks, higher troughs. It would need to do so much to get me in. And this may well be the low. We may find that you never get another opportunity better than right now to buy core lithium in the history of mankind. And I'm happy to miss out, ladies and gentlemen. This is where some people confuse me. You told me not to buy it when it was 94 cents. I say, I didn't tell you to do anything. I just said I wouldn't buy it. And the probability suggests to me that that the market doesn't like it. And that's why I wouldn't buy it. If it started to do the right things, I'd happily buy it at $1.10 on the way up and miss those 16 cents. Because if it goes from $1.10 to $110, who cares if I miss 16 cents? So pass on that one. I've done Minerals. I'm going to do IGO, which is more in the hold camp. there's the nasty things going on with nickel, probably not that great. And probably the last one we'll do is maybe Leo. Well, maybe we'll do Delta as well, because I know that's in the news lately. And a little bit difficult to find this one, unfortunately, just the way Amy Broker works. Oh, okay, look, what did we say last week? It looks like I drew some big black candles, and I said if you saw big black candles, then manage your exit. I think we are certainly managing our exit on this, so I can officially write on the screen -1/3 on that one. And let me remove that big black candle so I can see what we actually printed. Oh, look, you got your lower. Geez, it's almost the candle I drew. We're talking about candles during the day versus after the day. And I reckon you got your lower post in you. Today's the day, not yesterday. Yesterday was too early, but today's the day, because, ladies and gentlemen, if I'm anything, I am consistent. And there you go. This is stuff you can play along with at home. You don't need to wait for me to tell you to do it on a Tuesday. That's just silly. I've given you the tools to do this yourself. So we're absolutely 100% -1/3 here. Let's leave it at 1/3 for now, but if you wanted to do 2/3, I think you could, and just hang on to 1/3. And then we're going to do Delta Lithium, which almost gave you your signal yesterday, didn't it? The fact it gapped up, well, there you go, 100% yesterday's signal, because there's your $1. You would have been selling it in advance of that anyway. You wouldn't wait to the end of the candle to sell it. You would have done, by my model, you know the rules, -1/3 at the round number, and then based upon the end of the candle, I think you could probably go 1/3. And certainly if today confirms with that candle, -1/3, but that's okay. You've still got +1/3 remaining on this one. And some people, again, will tell me how good Delta Lithium is, but honestly, I don't care. All right, let's get back to many of your suggestions again coming in. I'm going to head over to the streamers now. I'm going to do for Ashley on Facebook, FWD. Ashley's been very patient on this one. They asked about it. He or she asked about it a couple of weeks ago, and I forgot to do it. So happy holder here, Ashley. Yesterday's candle is disturbing. Is it enough to take out? See, I wouldn't count that as the key demand candle. I'd certainly count this one as the key demand candle. So maybe not on yesterday's close. Look, if today confirmed with another black candle, and you are the most jitteriest, nervous investor on the planet, -1/3. Apart from that, I can't see any reason on the chart to sell this thing, or more specifically, not to continue to hold a full position here. It looks fantastic. The short-term trend is up. The long-term trend has changed through the amber. This is one we've talked about a few times. And if you check my tweets, because I'm pretty sure I put it in at the very least here, and that's probably how Ashley got on board, or maybe even earlier. Okay, so happy holder then. Nick asking if I can repeat what averages I use. They're over here, everybody. Okay, I won't go into any more words than that, but they're there, and you can look at them and inform yourself as to what they are. Happy holder on Fleetwood for you, Ashley. And just so I can knock these off and forget about them, ARU, this one's for Jackson. Jackson, I don't need to look at the fundamentals for this, because the chart tells me there's no need to look at the fundamentals for this. If this was turning up, I would happily go and investigate what they're doing and where they're doing it. Until then, I don't care. And I think this is the one with a particular billionaire or billionaires involved. And it just goes to show you that when the trend turns and when the tide turns, at the end of the day, the billionaires have done their buying, and the chart is going to move based upon the people who are buying and selling every day. The billionaires have done their buying. Now, the billionaire may launch a takeover bid, and today may be the low, and my name will be mud if it's trading at 70 cents tomorrow, okay? I don't know the future, but all I can say is right now I can't see any reason to buy it, and until it starts to put in price action, which looks like this, then I will not be interested in buying it, and there's so many things that need to happen before then. Hey, and if you know something more than me about what's going to happen next, please let me know, because I would also love to be able to tell the future. This one's for Sia, who just snuck in at the end of last week. Hello, Sia. Welcome back to listening to my random crazy rantings. I would have thought you would have got that out of your system many, many years ago, but it is so wonderful to have you back. Sia and I go way back. Okay, so for Sia, this Boss Energy, she snuck it in. I didn't quite get to it. I think it's still a hold. Look, if you were this way inclined, you may well have, just as a precautionary measure, exited 1/3 on the move through here. And you're probably not fussed by that. You're probably happy you probably just dusted 1/3 and you've still got your remaining 2/3. Yesterday's candle is very impressive, but given the price action is just heading in the wrong direction, I'm going to be a little bit cautious. Today's candle's not exactly confirming. And just let me see another nice white candle just in here. So this is where I want to go. So that's where I want to see the candle. It's going to change color in a second. But if I see that, then I'm happily adding that 1/3 back in. You might say, Carl, that is just so silly. To sell a third at what you sold it at, 310, and then to buy it back at 316. Like, mate, what are you doing? It's just, I know why you're doing it, Carl. You work for a stockbroker. And every time I sell my 1/3, I've got to pay money. And every time I buy it back, I've got to pay more money. And I say, look, yes and no, I do work for a stockbroker, but it's not always as sinister as you think. Because at Think Markets, if you're trading these with CFDs, I need to tell you about that later. I was going to show you a web trader platform, which is in here. For example, if I go boss BOE, don't tell me this is one we don't have, and maybe because it's the demo account, Nick, it's probably in the live account. See, this is a demo account here. We don't have all the Aussie shares in here, but I'm sure we will have it. You can trade CFDs on this one, and then you're commission free, ladies and gentlemen. You're commission free, and you can do your 1/3 to your heart's content. Happy holder here. Where does it get worse? Now here it is. Here's the problem here. This is the key demand candle. This candle here, I'll label it candle 1. And if we're closing beneath that, so close less than here, I'm going to go minus 1/3. And you can see how we use our exits almost as precautionary measures, don't we? We give the stock as much room as we can give it, possibly, until it says to us, look, there's no reason to be in it anymore. While I'm here, let me just quickly do the other couple of uranium companies. Paladin, look, got a little bit exciting there. I never told you to buy it, and I don't think I will. I think you can hold it on the basis that there is a bit of a short-term uptrend, but it's just so far away from anything I'd want to own personally. Deep yellow, you can see there a little plus 1/3 on one of these. So there's actually plus 1/3 here, plus 1/3. Look, I can go. This is how hard lithium is, ladies and gentlemen. Lithium will disappoint you, make no mistake. I'm going to go minus 1/3 on that candle. I know it's historical, but I think you agree that's what I would have told you to do. And you would just have taken some off the table here on just the risk. You know that uranium stocks are acutely disappointing and will probably disappoint you again. And this is why we never believe anything, ladies and gentlemen. I'd probably go minus 1/3 there. And BMN, I know that spiked up. Not that interesting. I'm going to go pass on that. Peninsula, again, not that exciting. I'm going to go pass on that. Lotus, pass on that. And here we are, ladies and gentlemen, once again, looking at the most disappointing uranium sector on the planet. There's 92E, and that has completely fizzled. No reason to do that. And I know Toro, I can't remember the other one, T something. It might even be here. Terra, there it is, Terra Uranium. It's just dead on the table. Never even got going. Lithium sector review, check. Uranium sector review, check. Rare earths review, LYC, because I did ARU. And we started to get really positive. In fact, there you go, 1/3, and wonderful example of how this model works. If you went 1/3 there, geez, that was aggressive because the trend hasn't changed. I'm not sure what I was on. Look, here you go. If you see this candle, okay, if you see this candle, look, I think you saw the candle. I think, look where I drew it. I'm talking about this here. Can you see this? This is where I drew it. And this is the actual candle you got on the day. Just coincidence. I'm not Nostradamus. So if you did get into that one, all right, on there, I would suggest to you, you got out here. And if you didn't, not my problem. I'm not you. Okay, I've taught you how to do it. If you didn't do it, that's your fault. Maybe even on that candle, but certainly after this candle, I think you probably got tagged on that one, but not terribly so. And you're out, and who cares? Let it go. No reason to own Lynas right now, ladies and gentlemen. None at all. Okay, going to get back to some of the Zoomers or streamers. I'm going to do Delta Lithium for Robert. I've done that. Thank you. Michael's also asked for Delta, but it's asked for A4N as well, which was getting going again, wasn't it? We went plus 1/3 here. Let me change that to green because I like my pluses to be green. Any reason to get out of that last plus 1/3? Look, I think it's still hanging on, but I'm going to use this demand candle here, Robert, Michael, as the, I think if we close beneath there, so let me change that back to red. I'm just going to say, look, close less than whatever the low of that white candle is, then I'm going to go minus 1/3, and I can tell you what the low is there. It's 110. Okay, so just a precautionary measure there. maybe it's losing some momentum, but happy holder. Don't get me wrong, happy holder in the meantime. IPG, there you go. You can see where the plus 130s, and I'm not surprised by the fact that some of these aren't doing so well. I don't know if you've seen what the market's done. The market has absolutely tanked. So the fact that some of these are actually holding up so well is testament to the trends that we've identified. Still fantastic, and still happy with this, but we cannot ignore this serious problem we have here. And if we were to close beneath that, and I'll give you a number, that low there is 408. And I'll write this on to close less than 408 equals minus 1/3. You know the drill. And we're probably going to get a lot of these today, aren't we, given market conditions. These two candles together were pretty nasty. And if you wanted to, I'm not going to write it in, but if you wanted to, just for future reference, that would, for me, constitute a minus 1/3, just as a precautionary measure. And today's candle's not looking that crash hot either. So we've got a little bit of supply coming in on that one. Okay, let's head back to the Zoomer step, pick up the pace. AGL, this one here for Doug, which again, we're considering whether we're taking profits. It's invincible. I mean, I'll leave it up to you, but as bad as that last candle looks, it's still live. It would have to get a lot bigger, Doug. It'd have to be, I mean, this is a demand candle, but I don't, it's not the dominant. This one maybe. I mean, if the last candle there is starting to close, say beneath that one, then maybe you could do what, minus 1/3. But even then, it's so far in the future. Why are we talking about something that's so far in the future? But I'm just trying to give you maybe a heads up level that you can use if I'm not around. But until then, happy hold. I can't see any reason to sell that one just at this stage. And again, illustrates how good is this? How good are these trends? And they've just withstood the barrage that has smashed the ASX over the last few sessions. From King LFG, I wonder if it's that one, LFG Liberty Financial. Looks a bit too soon. No, it is too soon. Now I'm zooming out. Maybe not, crazy soon. But King, I don't like the black candles. Even if it started to do well, it would have to start to do well with order of magnitude the number of white candles that we saw on Servicestream earlier on. I think we're a ways away from that. So look, I'm going to move on very quickly on this one. I agree with you. I think it's too early. Ask me about it in a few weeks. You can see it's just started to outperform the NASDAQ because the NASDAQ's tanked, obviously, and this one hasn't. So look, I can see an inkling of interest, but it's tiny. Henelli, we did Leo Lithium, and I did give you some ideas on what how to manage your exits on that one. Kogan, let's have a look at this. Talked about buying this one last week. Actually, today's candle is very good. And if we can close there, let's say if it can close on, at or near the high, I don't know what the high is going to be. So it's not enough for me to say, if it closes, well, look at that, we're at 4.99. Let's say, this is just too many contingencies here. Let's say close greater than $5, right? And within, 0.1, so that's, let's say 10% off high. Okay, and hopefully we're starting to see how we can start to code some of these things. How to code what a good candle is. Or I like to see the price of that candle close within 10% of the high, and I know that's close enough to being, a full white candle. Okay, so these are conditions. What will we do? Well, I need to change color, because if we get that, then I'll go plus 1/3 on this one to add to the last third, which I think was here, to be honest. I'm going to backdate this one because I was on Ausbies on that day calling it a buy. So adding to the position there, if we get that close as suggested. But otherwise, it looks like a textbook, absolute textbook turnaround play, even now to the point where we can see this POS over here. We'll change that to red, and we've got that POS. And we are actually even dealing with that POS plus the $5 round number, and the fact that we are beating the NASDAQ, then I think that's a happy hold, and maybe even an add if we can get the right conditions today. So that looks very good for you, Colin. David wants EML, not one I've looked at for a while. Maybe we got excited here, didn't we? You can see I drew a few arrows, got excited, had it turned amber. Shows the importance of waiting for that turn to amber. Still hasn't done it, and I can do this one very, very quickly here. David. I was a short. Well done, David. You had me going there. I don't know if you could be bothered. It's 60 cents. If you could be bothered. I don't know. What we're seeing here is a significant compression in the downside volatility. So there's got to be other better stuff out there. Throw me some other shorts, David. I'm going to pass on that one. If you don't know what short selling is, it is selling something now with a view to buying it back later at a cheaper price. You say, hey, wait a minute, I don't have any EML, Carl. How can I sell it? That's what short selling. Short means I'm short it. Hey, David, can you lend me $20? You know what David's going to say? Oh, Carl, I'd love to lend you $20, but I'm a bit short right now. Short means you don't have it. So short selling is selling something you don't have. How can you do it? Well, you can't do it typically. Again, that's where CFDs comes into it. David, obviously trading our CFDs, can short EML and then try and buy that back at a cheaper price. And whatever that difference is your profit. For Lee, we've looked at LRS already. In fact, we did the whole lithium review earlier on. Are you using AIM broker for my charts? I am, Mike. If so, where do you find those ribbons on your charts? I don't find them, I made them. But they're not hard to make, Mike, because I've already told you how they work. They are the moving average numbers there, and I've given you some ideas as to some of the logic behind their coding. And I'm sure if you Googled hard enough, you could find out how to do that. Hello, William, another one of my long-term, multi-decade sufferers, William, SSM. Oh, we've done Servicestream. I think it looks very strong. As you say, William says, looks strong here. Where's the stop for a new trade? Oh, okay, that's an interesting take on it. Pardon me. Gasping for air there. I talk very quickly, don't I, in these sessions? I'm under pressure. You have no idea. I've got requests here, and requests here, plus all the ones that have come in during the week. Woe is me. Somewhere under there, I think, William, because you can see that's the cluster of white candles. All those white candles are demand. And if we were to get beneath there, guess what? Demand's gone. And you no longer have a reason to be in this stock. Okay? If I have time, William, I always have time for you. MMS. Oh, amazing. Looks amazing. I did run this not that long ago. I think even before this candle here, to be honest, as a buy on Ausbiz. Maybe I didn't do it in one of these sessions. So if you did get in, hopefully around about 16, you're making a little bit of money here. And it does show what quality is. And this is certainly quality and every reason to hold on to this. Would I add plus 1/3? Look, let me tell you, remember that 0.1% near the high sort of business? Yes, I'd be happy to add 1/3 today to the position. And most of you would go, oh, I'm too nervous to do that. I can't do that because I'm finally making money, Carl. I'm actually making money on something for the first time in my life. Okay. And the thought of adding to it and jinxing it, no, I can't do that, mate. No way am I adding. I'm just going to, not this little black duck, right? I'm just going to hang on to what I got and hope it keeps going up. Fine. That's up to you. But if something continues to look good, continues to throw in signals, hey, and it's beating the market like it is hands down, why wouldn't you add some more risk to that? Because you have a plan on how to get out. And yes, I know, frustratingly, it'll be that 1/3 that loses you the money that you made on the first 1/3. I get it, but it's still about doing stuff that's the right thing to do, not because you feel like it, but because it's the right thing to do, and trusting in the long run, it will be the right thing to do, which I can assure you it is. Let us head to Perry, who's also asking about MMS. Great minds, William and Perry, thinking alike there. I do have to do Cettire actually, because this one's come through today from Huzzel Finance on the Twitter, HUZL. And they're asking also about Cettire, which, magic, wonderful. Another one we have liked a while ago, though. I haven't talked about it recently. Happy holder here. I know today's got a little bit of an upper shadow. We're getting a little bit close to $3, but it's not the first time we've been to $3, ladies and gentlemen. So it shouldn't be a huge surprise for us. But I'll leave it up to you if you wanted to knock a few out there as a precautionary measure. But I think it's fine. Hang on, because I think this is the real point of supply that you need to be worried about. And other than that, there is a nice short-term and long-term uptrend. The price action through here is exemplary, and I cannot see anything in the candles to tell me to get out. And again, we're outperforming here. It is all tick, 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 ticks for me. Could I get in? It's just a little bit of a ways away from my light green zone. And if you've been trading those US stocks, we do those on Friday. I hope, and this is not me doing I told you so, because I remember when I was starting out trading, I had a trading mentor that used to say I told you so. They used to say I told you so, and they used to say, Carl, did you learn anything? And man, that made me angry. And it took me years. And I'm going to talk, I was in my 20s, and this person was in their, I thought they were ancient, they were in their mid to late 30s at the time. His name is Eugene. Took me under his wing. And did you learn anything? I used to hate that, but looking back, obviously, now that I'm older than he was when I first met him, sometimes you need somebody just to wrap you on the knuckles a little bit and say, did you learn anything? So we talk on those Friday sessions about, things being a long way away from those light green zones, and you can just see how we're getting some mean reversion there. So I'm not a buyer on that one, but look, happy holder in the meantime. And there's no conflict there. You can't say, oh, you wouldn't buy it, but you'd hold it. No, it's just, look, if you think there's a conflict, that's fine. It's keep the conflict in your mind. It's not in my mind. In my mind, it's 100% clear. I'm a happy holder here until I get a reason to get out. And AZS, I wonder how that's going. Have a look at that for a little while. Magic, wonderful. What did we say last time? If it closes on the low, minus 1/3, I'm not sure if it did. I don't think it did. Or maybe beneath there. I can't remember. Go check the tapes. But I think we've still got some left. I think that's a message here. And happy holder on this one. If you've still got it, hang on to it. I know that's at odds with every other quote-unquote expert out there who will tell you, oh, it's gone up, take profits. You know what? We have taken some profits. In fact, regrettably so. We should have held the whole lot, but that's hindsight. Hold what you've still got left on this. And if you see the candles that I don't want to see, which is the black candles or the upper shadows, that's when you might take some action. But until then, that is still a bloody monster. Wonderful one. Probably one of my best picks this year. If you're not sure where to find my picks, head over to my Twitter, where you can follow me, and you can see in here, if I go, for example, $AZS, and then I type in @ and my handle, you'll be able to see every time I talked about AZS, and each time I put it in as a feature chart, as recently as June 16, and you probably have to go back a little bit further because it's going vertically. I certainly have run that as a feature chart a few times. So if you're not following me there, that's the one way you can do. I haven't put up any shortlists recently because the market's been a bit rubbish. I don't know if you've noticed. BM8 is the next one. This is for, I don't think it's that one, BM8. There we go. Battery. Ooh, a nice little pop-up here. Who give me this one? Anonymous. Okay. Looks ready, not sure. Oh, I wish we could go to yesterday because I would have bought this yesterday, right here. I didn't see it yesterday. I didn't do a scan. But I reckon if I did do a scan, this would have been in my shortlist and it probably would have made feature chart. Why? Because I love this. Maybe it needed a little bit more volume there, but certainly a step change from what it had been getting previously. This is obviously some big announcement here. And then you can see what I love here is obviously that's the white candle that naturally draws me to this one. What keeps me here is the shallowness of the pullback on these two candles, and this candle here, let us call this candle W for wonderful. Candle W for wonderful, that's the wonderful candle there, which tells me that short-term supply. Because don't forget, normally when things go up and this went up quite a bit, people want to sell. How much do they want to sell? Not much. Okay, plenty of demand in the system. Candle W tells me they're back in, and today it pops. I don't know if I'm going to buy it today, Anonymous, simply because that upper shadow, and it's getting a bit of a ways from the green zone, but it's 100% hold. I can't go back in time. Hey, if it closed with a full white candle up the top, it is absolutely tempting, but I would, again, because this is how the model works. It's a plus 1/3 business, right? I know I'm going to backdate this and then I'm going to take it off because I don't want people, I don't want myself to come back and think I told you to buy it there. I didn't. Minus 1/3, that's a bit of a slip, isn't it? It's a bit of minus 1/3 going around today. What was I going to say? I lost my train of thought there. Look, plus 1/3 there, and I'm just going to hold back just because it's a bit of a ways away. Okay. If it closes on the high, hey, it depends on your risk tolerance. It's super specky. It's a long way from the green zone. Go into it eyes wide open, understanding what could happen. I'm going to take that off. That's not what I'm saying today. It would have to close absolutely on the high, with actually probably some nice supply removal in that volume as well. Okay, let's keep moving here. NIC from Tim. Hello, Tim. I can do this one super quick. I'll give you the 20 seconds that I need to give you on YouTube so that I can make a new segment on YouTube. It's a no for me. Short-term trend. And there's so many reasons. Short-term trend, long-term trend, price action. You can do this at home, follow on at home, draw it in. Lower peaks, lower troughs, and just too many black candles and it's underperforming the market. It is all strikes out here for nickel industries. No interest at all. And I know somebody probably told you it's got great fundamentals, and I totally respect that. I totally get it, and I totally respect that, but I don't care. Okay, let's go to Mr. Boda, who asked me a few on YouTube. Northern Star, maybe we'll do a little bit of a gold review here. Last time we talked about it, plus 1/3 remaining or 2/3 remaining. I think I'm changing that now, but that's old, that's ancient. There are just too many lower peaks through here and taking out of points of demand. So this would now be all out. I can't see any reason to own this just right now. And if it starts to do this sort of stuff, it would have to really do some of this sort of stuff like quite well to get me back in. I can see the possibility of this long-term trend zone holding. That's somewhat attractive to me. Okay, but it's just too early. It's just too early in the piece. So given I can't see any reason to buy it, I'm going to refrain from even calling it a hold at this stage. If you did have it, because I know some of you do, then maybe your last bug out is on the close beneath the leg, the last little trough there. But I'll leave that up to you. Newcrest generally is questioned at that same time. Actually, I'd go a hold on Newcrest. I think we're starting to see some of these higher troughs come in. I know the price action is not ideal, but there's enough in there to call it a hold, because we're actually seeing some evidence that this long-term trend zone is holding, and it's much closer to a buy actually than you think. So if it closed, it's almost one nice white candle away from a buy for me, Newcrest actually. But certainly if it starts to close above that point of demand, then I would buy it. But a happy holder on this one. That's very different from the last one, isn't it? Ramelius has cracked. You can see there we've got some minus 1/3 and where to do it. So I can go a hold on, if you've got some left, I can go a hold, but if it's starting to close beneath there, that's your final exit. Okay, so beneath that, you're doing your minus 1/3. And let me do RSU. I'm just doing my favorites here. There you go. You can see how the model works. As good as it looked, gold didn't play ball for us, ladies and gentlemen. If gold price kept going up, this would have been fantastic. It didn't, and that's why we have, look at this, that's why we know what to do, and that's why we do what we know. Okay, so if you've got anything left on it, happy holder, again, on the basis that if it closes under here, then that's your final exit. So I wonder, people, I know it's been very popular, but I've talked about it many times. I wonder if you've been disciplined enough to follow that, or you have been stubborn enough not to follow it. That's up to you, of course. I think that's enough. Perseus, I'll finish with Perseus. Okay, let's go back to, I'm going to go back here to the Zoomers and HAW. Let's have a look at this one. This one is for Chris. I don't mind it, Chris. Today's candle's not allowing me to call it a buy today. And I think I'm going to go with a no. Just on the sketchiness of the candles here, you can see gaps, blocky candles. I can't even see the volume in places. And we're just up to this point of supply. I'm just going to say there's enough reasons for me to just stay out of this one. And look, I get it could be the best thing. It's got a lot going for it, but I'm just going to stay out of this one. And I think that could happen again. So it's a pass for me, unless you knew something about it, like you know the managing director and he knows he's about to announce something fantastic. Jill's asked about AZS. I've done that one previously. LYL for Mike. I don't need to say much more here, do I, Mike? Because we've actually put in place our minus 1/3, isn't it? Minus 1/3. I'm not sure why I said it there. I can't see any reason to, but I said it. So I won't delete it. I'll leave it there, but I'm sure something had to happen. I'm sure you had to have a really big black candle on that day, and it actually didn't occur. But I had this in as a fail-safe, and I'm just going to reiterate, obviously, beneath there. Are you holding a full position on this? Maybe just, but probably not. There's been a few reasons to get out, at least a third prior to this, and I think at most you're holding on this is two-thirds remaining at most. Let me just write that in, at most, plus 2/3 remain on this one. Okay, let's keep moving. Then I'm going to go to, I've done all of those. BKY, this one is for Jackie, BKY. And Ron, you're up next. Oh, looks great. Well, that's another one of those uranium stocks, isn't it? The Spanish uranium stock. I don't know. Are they getting the approval for that mine, Jackie? Is that what is happening here? Is that what we're seeing on screen? Happy holder. Today's candle's not great, but it's not terrible at all. In fact, nice gap up. Unless it closes on its absolute low today, Jackie, this is still 100% hold for me. A little bit concerned about this level up here. But until you saw an upper shadow, we've got a lower shadow today. If you saw the upper shadow and the black candles come into that zone, I think you've had a really good run. And I'm going to say that just as a precautionary measure by default, if you get close to that, minus 1/3. Today's probably not the candle to do it, but if I started to see more bearish candles pop in, then it's a minus 1/3 by default, and that would leave you with plus 2/3 still remaining with skin in the game if you think this is the one. This is the uranium stock to own. I haven't caught up with it lately, but I do know they have potentially an amazing asset in the epicenter of nuclear power generation over there in Europe. But they just have not been able to get the approval from the local government, is my understanding of the matter. I said I was going to go to Ron next with ARX, and I could do this one pretty quickly here, Ron, because it's going to be a no for me. I can see some good stuff happening though, so this is good. There's some nice white candles in here and a bunch of lower shadows. There is clearly some demand in the system for this, but it's not enough to get me in. It would have to do quite a bit. So it'd have to do this sort of thing to get me back in. And I would suggest to you, we are weeks away. So let us not waste any more time on something that could take weeks to develop. You could keep asking me about it. Of course, keep tuning in on Tuesdays. But it's not for me. I can get to a hold. Remember, I did the percentages before. I'm still 0% buy on this one. And I think you should do this for every stock in your portfolio right now. Be honest. Use my methodology and say, okay, well, don't even say what you would say about it. What would Carl say about this? And if you're getting a bunch of 0% buys on your stocks, that's not a good look. I can go, I'm going to go 50% hold on this because I think there's some really good stuff happening there, but it's still 50-50 sell, isn't it? Because there's not enough good stuff happening. And unless you're really getting a nice high percentage on your buys, why are you still holding it? Or at least a very high percentage on your hold. Okay, I better do some of the chat ones here. I've done those. Nick's chatting to some people. Well done. Thank you, Nick, for taking that off my shoulders. James Hardy. Oh, okay, interesting here. Well, that's a lot of black candles in a row, isn't it? I don't like to see that. And if today closes beneath that low there, so watch out. And I'm going to say, I'll write it on the screen for you if you're unsure. So it's that low there. I don't like that. And it's purely precautionary because it's not that bad. Don't get me wrong, it's not that bad, but that many black candles in a row does disturb me. I know it's been a bad market. So maybe I'm being a bit panicky here. Let me go close less than, I'm going to go say 38.35, and then that would be minus 1/3. Purely precautionary at this stage. Okay, but we really don't want to see it come back beneath here. That's for sure. And what's that? I mean, that's a compulsory manage your risk, and that's 37.80. And maybe that could be a second place where you minus your second third. Okay, in the meantime, if I don't speak to you sooner. Oh, I'm exhausted, ladies and gentlemen. We are going pretty well on time. Stop typing in any new ones and I'll get to the bottom of this list. MRM is the next one, which looks pretty decent. Old MRM. I think we've seen since the last time we talked about it was all up here, all in this phase of demand. Okay, so this is your demand side. I haven't done this for a while, have I? Demand side market. What is this? Higher peaks and troughs. You're going to see lots of white candles. You're going to see lots of green in the trends. Okay, this is what I call an equilibrium market. And the other thing about this is, obviously demand is greater than supply, right? Okay, what's happened here? It's clear as day. I mean, blind Freddy can see that now demand equals supply, okay? That's not a bad thing necessarily, but if you start to break through, say here, right, that would put us into what I call the supply side market, where now supply is greater than demand, and things are going to look very different for you. You're going to see more black candles. You're going to see pinks. and reds on the trend zones, or at least amber, you're going to see lower peaks and lower troughs. And that's kind of the phase we're in right now. If you were so convinced that this is the stock to own, I can see a path to holding it. More recently, actually, to be fair, the candles have been pretty good. I mean, white candles, the price action is extremely flat, just demonstrating that supply overhang, isn't it? There is a fund manager. This is how. Please, you have to understand how markets work. Okay, there are these things. They're called fund managers. Okay, in brackets, smarty pantses. Okay, and some of these smarty pantses bought it at 40 cents, right? And they're buying and holding and accumulating, and now it's $1.20, and they just say, you know what? What? Guess what? Right? I made enough money, and they just become part of supply. It doesn't mean all the smarty pantses are getting out, but one or two of them are. And it's the buying of the other smarty pantses that think it's going to $2 who are still holding it up. So demand and supply become equal. Here, all the smarty pantses were buying and none of the smarty pantses were selling. Here, some of these smarty pantses have broken ranks. If we get down here, I'm going to suggest to you that all the smarties are getting out. I know that's a long word, but then consider who is left holding, with a K, holding on, and I would suggest to you just those who don't. I know there's an apostrophe in there, know how to read a chart. Okay, and ladies and gentlemen, I just summed up for you how markets actually work. You're welcome. Okay, TUA. Happy holder, no reason to sell this one. Ben, looks fantastic. Candles are still white. Is it going to shoot the lights out, light the world on fire? Probably not. This looks like one of the most boring stocks I've ever seen. You know what I'm talking about. But I can hold on to it. Would I buy it? No, it's too boring. Let's go to a stock that is not boring for Helen, and that is NEU, which is not that one. That looks bloody awful, by the way. 9 Entertainment. Wait 20 seconds so I can put it in the YouTube clip. But we're heading down here. NEU. Okay, well, this has changed. I mean, this has changed trend. You can see we've done a bunch of minus 1/3 on this since it changed trend. And in fact, we are very, very close, aren't we, to getting beneath this one here. So just watch out for that one, Helen. And I still think if we're closing beneath, this is where the demand should be. Okay, this is where the demand should be. All right. Is it there? And if we get beneath it, it's gone. And therefore, why would I still want to be in this company? That's probably your last third there, I reckon, Helen. Just between you and me. WGX is the last one I'll do here for the Zoomers. We've seen Newcrest looking half decent. The other ones, not so much. I'm going to put this in the not so much camp, but this white candle here is certainly attractive to me. It's very interesting. It's happening at a place where I would expect dynamic demand to come in at that long-term trend zone. The price action is still not good, and the trends are not good enough yet. So it's one of those where you're going to see me do stuff like this. And, I think with the right sort of candles in the light green zone, where's the light green zone? There's the light green zone. I might consider it. I can go hold, but what's wonderful also about this is we've got a really clear-cut level. And if we're closing beneath there, it's all over Red Rover. So close less than here, all over Red Rover. Okay, we're going to finish this list here, and then we're done for the day. Done that one. GMG. Oh, there you go. What did I say last week? Plus 1/3. I reckon the candle was looking better than that. In fact, I do go check the tape. And this is where I do get excited sometimes. And I did say something like plus 1/3, but you just preferably you wait. I'm not trying to back away from it, but preferably you wait for a better candle. But no, I did say plus 1/3 last week, and I said if it closed above there, another plus 1/3. I don't know. If you saw the market tanking, then you're better than me. I didn't see it. But that's why we dipped the toe in the water and not the whole leg. These aren't great candles, but I don't think you need to get out until we say close beneath here. And that's where you are taking your lickings on this, and that is possible. Close less than whatever that is, minus 1/3, whatever that is. I'll tell you what it is. 1933. So let's say 1930. Okay. Well, maybe a little bit less, give it a little bit of room. That's too close. Let's say like a 1917, just to give it a little bit of room there. Okay. And you could hear me slowing down to my voice. MPL, break. If it closes as bad as that, for me, then this is your exit, because we have seen, whilst it's been a great trend up to this point, we have seen a significant slowdown in momentum, getting back to that discussion of demand side equilibrium, and potentially moving back to supply. But this is a disturbing candle for me. If it closes really any lower than where it is right now, then I would suggest that you are absolutely managing your exit. But I would suggest you've also had maybe some reasons to do that before, with all of those black candles, but I'll leave that up to you. Certainly at least minus 1/3 if the candle closes any worse than that today. And that one was for Brendan, and I've missed out for Baharuddin, HIO, sorry, I'll do that for you now. Hawthorn's Iron barely has a pulse here, unfortunately. I don't need to do a whole lot more with that. You can see short-term trends, long-term trends down, price actions down, and overwhelmingly black candles. And really, let's face it, there hasn't been a reason to own this stock. Well, there hasn't really been a reason to own this stock probably since here. So if you've continued to own it through this, it's not your fault. You just didn't know. You just hadn't seen any of my teachings before. If you did know my teachings, then I'd be saying it's your fault. But you didn't know. Now you know. I can't see any reason to own that stock. Okay, and I accept it might be the best stock in the world, but as I have said many times, I don't care. Tintin, I did Lynas earlier on in the session, so maybe catch the recording on that one. I'm officially done today, and therefore I need to tell you something very important. I'm going to head back here because I don't know if you noticed before, it flashed up very briefly. Finally the landing page is built, and there is our wonderful, that's not it. That's where I want to go, and that's still not it. I'm going to turn myself off. There we go, so you can see what's underneath it. There's our landing page for the Traders Summit. Now, in their infinite wisdom, marketing has given us a bit of an odd link, but I'll put the link if you're watching on YouTube. I'll do it there. If you're following me on Twitter, I'll put the link there. But it's thinkmarkets.com/au/LP. /traders-summit. Okay, you don't have to type in that last little bit, but type in here and type in your details and register. If you are going to be in Melbourne on the 22nd, Saturday 22nd of July, we will be at the Melbourne Marriott Hotel, myself and two of my good buddies. And for Sia and William, you will know Kel very, very well. You might not know Jason, but Jason is an excellent trader as well. And you can come and catch us live and come out, hang out with us, have a chat, have a cup of coffee and a milk arrowroot biscuit, and chat markets. If you are not a client of Think Markets, well, you certainly should be, because we are the best in the business. We have all the products you need to trade here, being ASX shares, flat rate, $8, CHESS sponsored. But for me, the key is those CFDs, allowing you to trade commission free, to do all the plus 1/3 and all the minus 1/3 your heart desires. Market leading spreads, over 4,000 products. Award-winning broker, the best platforms will continue to be nominated for awards for our platforms, and most importantly, dedicated account manager with 24/7 customer support. It's so important. And I do know many big corporates. I've been trying to get in touch with a couple of them this week, eBay, Afterpay, to sort out some issues. And ladies and gentlemen, it is so hard to contact. They don't have phone numbers. Some of them don't even have chatbots anymore. That's how stingy they are with all the money they're making, particularly pointing out their eBay and Afterpay. It's just so difficult. I'm not saying it's impossible, but it's downright difficult to contact them. Hey, head to our website. We've got a phone number. Call us up and we will help you out with your request. And that sets us apart from not just eBay and Afterpay, but from most of the other brokers in the space here in Australia. Hey, if you're watching me on any of the streaming channels, hit the subscribe button to stay notified of any of my future video updates, 3 a week. How about that? And it's important to hit the thumbs up button. Helps us out on those YouTube algorithms so we can reach more people ultimately and help others out. It's been a pleasure chatting with you today. All the best for your trading and investing until we catch up again. Bye-bye for now. Before you run away, don't forget that everything we've discussed today is general in nature. It has not taken into account your personal financial circumstances or particular needs. So before acting upon that general advice, consider it carefully or seek the help of a financial professional. You can learn everything you need to know about Think Markets and our products and services by heading to our website and downloading our product disclosure guide.